Paul Calderon here, real estate agent. So we have a lot of interesting movements to report on today. Redfin has dropped a market update, and we also have some news to report on the mortgage rates. So before I get started, hit the like button if you find some value in this, or post your questions in the comments. I want to hear from you. So let's get into it. Redfin has updated their market housing update. Nearly 1 in 5 sellers are dropping their price, and it's the highest rate since October 2019. So in essence, they are saying nearly 1 in 5, 19.1% home sellers dropped their price during the 4-week period ending May 22nd. Boom. It's the highest level since 2019. Mortgage purchase applications were on par with June 2020, and the number of home buyers touring and offering on homes posted a large annual decline since 2020. So less people are touring homes and less people are putting in offers, which is expected because the rates went up. Okay, there's some other, well, not just the rates and inflation. So there are some other interesting factors. Okay. The Redfin chief says the picture of the softening housing market is becoming more clear, especially to see home sellers who are increasingly turning to price drops as buyers become more cost conscious under higher mortgage rates. So those overpriced homes, if your home is overpriced in your market, you're most likely not to get the offers. So you have to price accordingly, which is very important. And he gives some leading indicators for activity. Less people searched for home for sales on Google. It's down from 13% from the year before. The seasonally adjusted the seasonally adjusted Redfin home buyers demand index was down 12%. Right there. Touring activity from May 22nd was 29% down from the same period of 2021. All right. So you have less people touring homes. Mortgage applications were down 16% from the year earlier. And here's something that's interesting. For the week ending May 26, the 30-year mortgage rate went down slightly to 5.1. And here we are. Look, this is Freddie Mac's site. And look, the 30-year fixed is at 5.1. Okay. It's down 0.115%. 0.15% from last week. Okay, look at the curve coming in. It's slightly coming down. So they are adjusting. It's like they're hearing and they're feeling this. So it's adjusting. Here's some key takeaways. The home sale price was up 16% over the year record. Here's another one. I want to go down to not the home sales prices. Look, the median asking price is still up 17.8% over last year, where we were last year. Pending sales is down 5.4%. 55% of pending sales were under contract within 2 weeks. The 4-week average share of pending sales under contracts within 2 weeks of listing. That's pretty good. You know, to have your home under contract on average within 2 weeks is pretty good. 40% were under contract within 1 week. So the home sold in a median of 15 days, the rolling average on the market. Look at that. And here's some more. 57% of the homes sold above the listing price. And 5% of the listings had a price drop. So there are some adjustments in prices to meet the market demands or lack of demand. But 5%, that's not a very big number. So, and for the 4-week average of sales price to list price ratio for homes sold, 102% of the homes sold at the list price. So, there you have it. The rates have curved down and the market is responding. It's still kind of strong. There's still a demand for housing. There we go. All right. See you on the next video. Hit subscribe and put your questions in the comments.